Hi guys. So here's my recap of EURUSD daily time frame, discussing today's price action. And to be honest, I was expecting for price to take out those relative equal highs right here. But instead we get a very bearish day. So let's see what happened. Going straight to the 15. Yeah, like I said, I was expecting price to take out those highs. But as you can see, price on the 15 was already on the bearish order flow on the other side of the curve. So pre-London, we already had a bearish dealing range, which took out this high and these lows. So this makes it this dealing range from this high to that low. And price was stepping into the 50% level and then just melted. And if we see what here happened, this was just bearish order block that held, which pushed price lower. I wasn't expecting this, so price just melt. We above the midnight opening price, so it was a premium, and prices took off. Then what I did is I was marking out dealing ranges. So first I was using this dealing range right here from this high, low to that high, and it just broke. It melted up straight through it. Therefore, I used this dealing range because this low took out those lows, and price just went through it, used it as resistance, and went lower. So therefore, I went to use this low because obviously it took out all this liquidity right here. And also this was a bit tricky because this low has a equal low with that low. So that's a very nice liquidity source, of course. So that's something to keep in mind. But here, with lunch, price took those lows, then traded higher, came back, and found support on those lows. Then it broke this high. So I thought that we were shifting bullish. So I took a trade inside this area. I'll discuss it later. But yeah, and eventually price traded below these equal lows one more time and then reversed. So where did price then reacted to? Well, if you look left, there's this very big push on the buy side of the curve. So if you go up one time frame, we can see there are two big fair value gaps. But if you go up one time frame more to the 4-hour, you can see this fair value gap right here. So this is a 4-hour fair value gap, and notice where price taps into the 50% level of this fair value gap, and then we got the real move. Yeah, so anyway, let's discuss it right here. So this was the breaking market structure, and this was the lowest low right there. So let's go to the 1 minute. So I was watching price action in lunch, and lunch took out those relative equal lows, right? And so this breaking market structure. But I was I wanted to see more price action because price was very, very bearish. So then this a 50-minute high. So here created 50-minute high, still bearish, and then price was unable to break this low right there. Price created more equal lows, but then I saw the displacement right there at the beginning of just before London. Oh, sorry, just before New York opened. So I went long over here with my stop below this low, and my target was 50% of this high to this low. So it was somewhere like that. This was my trade. So I had to wait a bit, but eventually it went in my favor. So, but since price was very bearish, very strong momentum, I was watching this high, and I noticed that price was having some trouble uh, pushing higher here. So I took a partial around this candle right there and put my stop loss above my entry. So I was completely safe. And as you can see, within no time, my stop got taken. So I made a very small profit. This was my partial. So that was the Judas swing of New York. Then we got the manipulation, maybe, well, two Judas swings actually, that drove price lower and took out all this liquidity resting right there. Then it tapped into the 4-hour bullish value gap. It touches the midline, the consequent encroachment, but notice that the bodies are closing above this level. And also notice prices going sideways. And now after this low, price came up, price came back, and it did not take out this low. Now price comes up again, takes its liquidity by a bit, comes back, but is respecting the bearish candle. So you could have taken long here, as in this being a Gaussian block. I didn't do that. I didn't do it. And then price traded higher. Price never came back to a discount. And at this moment in time, let's see. Let's see on the 50. Maybe we can split my screen. 1 minute, 15 minutes. Where are we? Yeah, so let's see. In here, no. So at this moment, we invalidated this value gap, right? I remove this one. We close it in here. There we just consolidated, and there we push higher again with speed. So if you think about what price has just done at this moment in time after this speed, so price looked like this, right? Like so. Did not take up this high, but if you look what it already did, price went sideways, it consolidated, then it manipulated this move up first, taking out all those buy side liquidity. Then it manipulated the other side, taking out the sell side, and also those relative equal highs, those older relative equal lows are also taken. So it has generated a lot of liquidity here and grabbed a lot of liquidity. And then it's also in a very deep discount. And now we see one big displacement candle with an indecisive candle, which is almost accumulation. And now we see this big bullish candle coming out of it, which completely negates this fair value gap. So when this move happens, we can measure this move from this low to this high. And there's this order block. Not sure if there's a fair value gap. Right here's the fair value gap. Right there. So this is this could be, if you have the narrative complete, this could be a very nice entry. You could enter here on the 50, which aligns with this fair value gap, and your stop would be at this low right here, 8 pips of stop loss. And the target, what would you target? Well, I'm going to remove this flip. I would measure this high to this low, and we're almost at 50%. So I would target around 50%, which is a 1 to 1 to 9. So that's almost a 1 to 2, which is perfect fine for me. And it would be hit within a few minutes. So then what happened was price trades higher and higher until the 75% level. Because remember, this for me is obviously a dealer and bearish dealer range now. Took the buy side, took the sell side, took multiple sell sides. And at the 75% level, there's this fair value gap from this high to this low. Extend it out. And look what happened on the 1 minute. So 1 minute goes into this fair value gap. It wicks and traded just above the consequent encroachment, but does not fill in the gap, which is weakness. Then price goes lower, finds support at the bottom of the fair value gap, trades higher, but then it is respecting, look at the bodies. The bodies are respecting the consequent encroachment to the pip and also touching into this 1 minute order block, and then sends price lower. So what happens here is that we trade below down close candles, and we are respecting the mean threshold of this level, which is in a deep premium. So, and also we have, of course, our market structure shift. So the shift in market structure from this low, from this high to this low, we have a big push to the downside, taking out all those lows, also almost negating. It's now filling in this fair value gap. So then you can expect a reaction, price come back up, comes back into this fair value gap right here. There's this fair value gap, which is in premium. So that is your short right there. Stop above the intermediate term high, because now an intermediate term high has been created. Left, right. As you can see, intermediate term high. And the target, I would use this low to this high, because this is a new dealing range. We have taken out buy side, we have taken out sell side. And the 50% low mark is here, which is in alignment of this breaker. High, low, higher, high. So here is the breaker. So where do we target? We target the breaker at 50%. So I would just use this for a nice 1 to 2, and price went there. Took some time, but eventually it went there for a nice trade. So this was our price action for today. I hope you liked it, and speak to you next time. Bye.